Hello, everyone, and welcome to another episode of Insider Financial Talks Penny Stocks. My name is Alex Carlson. I will be your host today. I am the editor-in-chief of InsiderFinancial.com, and today we are going to be discussing three NASDAQ penny stocks on the move: BNGO, JAGX, and OCGN. But before we get into that, we have a few housekeeping issues. We have no business relationship with any company whose stock is mentioned in this video. Insider Financial and myself are not investment advisors, and this video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is meant for informational and educational purposes only and does not provide investment advice. With that out of the way, if you like this video, remember to go and give us a thumbs up, hit the red subscribe button, the little notification bell to be notified when we go live with a new video. Also, go over to signup.insiderfinancial.com. This is where our subscribers get first look before our regular readers and viewers. Stocks like NEO, we had our subscribers in at 6, MMMEDF at 34 cents, ENZC at 001, and TSNP at 0008. That was the biggest runner of 2020. Also, if you like free stocks, go over to use our referral link for Webull and get up to 4 free stocks between now and January 15th. That is a good promotion that a lot of people like over Robinhood. Robinhood has had many crashes, and with Webull you can trade pre-market and aftermarket. So 4 a.m. to 8 p.m. you can trade on Webull. And with that out of the way, we are going to be taking a look at BNGO, OCGN, and JAGX. And we'll include link to our articles here. But you know, in the OTC markets and on Monday, we saw some selling across the board in some names. And we've been saying here to anyone that followed us at Insider Financial, watched our YouTube videos, we've been saying that selling was coming. And this is because, 2020 was just such a banner year. They had a lot of people that were going to defer their selling until 2021. They didn't want to book their gains in 2020 and have to pay the tax come April. So this way they can defer that, and they book their profits starting the first day of the year. So, but there's always runners. And as we try to educate and we say repeatedly, it's important to have a diversified portfolio. If you want to bet on just one or two, you'll have just as much luck at the casino. So we really don't recommend that, and that you really want to have a diversified portfolio of 10 to 20 penny stocks to offset red days like Monday. It's also important to own more of what's moving and less of what's not. And we discuss here a little bit on how to trade penny stocks. It's not the same as trading blue chips. With penny stocks, you have to be patient. You have to get in before the crowd. Find the momentum before it happens, and then be patient. We're not day traders. If you want to day trade, we hear that clown Tim Sykes. He's got plenty of openings. He's more than happy to take your money for one of his BS newsletters. He's the type of guy he'll show you how to make a few $100 today and then lose $1,000 tomorrow. So that's why we don't recommend day trading. And we don't recommend chasing, buy dips, sell rips, swing trades that take, a few days to a few weeks to even a few months to play out. That's the best strategy in these markets. And, typically we cover OTC penny stocks versus NASDAQ. And it's no preference on it's just, last quarter of 2020, the money to be made was in OTC. We had more than 10, 20, 30, 50 baggers, TSNP, those that got in early, they got sitting on over 18,000% gains. So, you invested $1,000, where it ran to almost 35 cents. Some were sitting on over $300,000 in gains. So it's just been a huge runner. OTC was the place to be last quarter of 2020. But as we see starting 2021 and the last few weeks of December, there was plenty of money to be made in NASDAQ. And, we really hate when we see penny stock traders get pigeonholed into saying, oh, I'm an OTC trader, or I only trade NASDAQ. Trade both. Go where the money is. I mean, this is all about making money. It's not about, getting yourself labeled as an OTC trader or a NASDAQ trader. Look, we trade penny stocks for a reason. Penny stocks have the potential to deliver, the triple digit, quadruple digit gains that we're looking for, and, the only other way you can make those kind of gains is by trading options. And, that's another way, but we prefer owning the stock. Options have a time frame. And, you just don't like to get into a situation where you lose money on the option and then the next week it works out. Whereas, that's why we like penny stocks more, because you own the underlying security and you can be patient and let it play out. And you don't have that time restraint. And, markets move in cycles. Last year, the first half of 2020, it was huge to be trading NASDAQ stocks. It was much better than OTC. And, we captured runs in, SRNE, NEO, INO, IBO, Workhorse, and many others. And then once the summer came, many of the COVID runners that were running in the first half, after COVID was discovered, and then up until the July, they lost their momentum. And it's important as a trader to pivot and go where the momentum is. And that's became the OTC in the last half of the year. But right now it's just been only 2 trading days, so it's a little too early to tell where the momentum's going to be. But right now we like what we're seeing in NASDAQ. In particular, first up is BNGO. This is another one. It's up over 1,000% in just the past, 7 trading days. We saw some profit taking on Monday, but that is bound to happen. It closed down 31%, but, when you got a stock that runs, it started here at, 49 cents, ran to over $7. So a pullback to, $4.95 is no big deal. And, it's going to retrace. It's got a gap here that it needs to close. So we could even see it pull back to $3. And then from there, we'll see where it finds support. And that's where, we say buy the dips and you sell the rips. So, if you looked at, if you missed the rally in BNGO, just be patient. The time where you can buy the dip is coming. And what's going on with BNGO, the rally started after the company disclosed that its genome mapping platform, Sapphire, had been accredited in the U.S. by the College of American Pathologists. The platform will be used by BNGO's customer Praxis Genomics, marking it as the first company to offer laboratory-developed tests utilizing whole genome analysis. Sapphire's optical genome mapping is an alternative to traditional cytogenetic methods. Also helping to this rally was the company received a 180-day delisting extension from the NASDAQ. And here, this last paragraph here is important. The excitement surrounding BNGO is that genomics is a multi-billion-dollar opportunity. In a comparison to test, PacBio's Hi-Fi chemistry was only able to detect 72% of the large structural variants detected by Saffir. And if you compare the two companies, PACB has a market cap of $5 billion compared to BNGO at $752 million, and $752 million, that was prior to today's sell-off. So, there's an equity raise is likely, but, we believe BNGO has significant long-term potential. So, again, look to buy the dips on pullbacks. Moving on, NASDAQ penny stock number 2 is OCGN. OCGN is another 10-bagger on the NASDAQ over just the past seven or so trading days. And OCGN is a COVID vaccine play that is partnered with Indian biotech company Bharat Biotech. And this one here is really, really interesting. Bharat Biotech received emergency approval for its COVID-19 shot Covaxin from the Indian government on Monday. And OCGN has a binding letter of intent with Bharat Biotech to co-develop Covaxin for the U.S. market. And, you got your... With any technology, whether it's a tech company, a biotech, you have your skeptics, and we present both sides because we believe it's important to listen to the bears, because if they make sense, we'll agree with them. But most of the time they're out to destroy a company, spread misinformation, and that's why we love to see when they get squeezed, when they get their ass handed to them, as we really hate the shorts. In general, they're low-life scum, and they hurt a lot of innocent shareholders. So. But what this one short seller is saying is, on what basis was this approval given when Bharat Biotech is not? They're saying has not shown enough data proving safety and efficacy. Look, every vaccine has been rushed. I'm not going to get into what you believe or debate the merits of the vaccines, but, we are looking at, record time with the Pfizer, the AstraZeneca vaccines, Moderna. So, again, it's just not enough time to determine what the efficacy rates will be. I mean, they're saying 90% plus, but again, it's in a short amount of time. Is it going to be effective 1, 2, 3 years down the road after getting the shot? And, that will tell. But what we really like, and you look at this, we have a link to the New York Times article on how the Bharat vaccine works, and we really like what we're reading on this. And their vaccine, it kills the coronavirus. Covaxin works by teaching the immune system to make antibodies against the SARS-CoV-2 coronavirus. So it explains how it worked. But, it's important to understand that, their process is as an inactivated virus, and this has been used over a century. If you look at the polio, rabies, hepatitis A's, this is what the technology Jonas Salk used to create his polio vaccine. So the focus and how they created this vaccine, it's been proven historically to work. So we really think this vaccine has a lot of potential. And I know people are going to say, oh, it's India. Look, I've been to India. There's a lot of smart people. We work with them. We use them for IT work. They're very, very, very smart people. So don't underestimate them. And, as we said, bottom line here, all COVID-19 vaccines have their skeptics. Revolutionary tech companies like Tesla and Elon Musk have their skeptics. Our advice is, bet against them at your own peril. And, so why we're rooting for OCGN. And if you're rooting against them, then you got problems. There's something wrong with you as a person if you're betting against a COVID-19 vaccine play like OCGN. So, again, we're rooting for it, and this is another one to, if you missed it, look at buying the dips. Moving on, NASDAQ penny stock number 3. This is JAGX. We're finally getting some vindication on JAGX. We came out in September. There will be a link in the description on September 10th. We said, is Jaguar Health stock heading to $1? And you look at the chart here. Back in September, so basically, nothing happened for several months, and finally, this year we got the move, and that's why, we stress you have to be patient with these penny stocks. You don't know when the run's going to come. The key is you find good quality penny stocks, that have potential, that have good quality management. You take a small position and you be patient. If it drops a little bit further, you could add a little bit more. But it's important, don't make any one stock too much of your portfolio. You don't want to be 90% of your portfolio into JAGX if it's a losing position. Now, when it runs like this and it becomes 90% of your portfolio, that's great, because you're working with house money. But it's important to not get too heavy, and you want to own more of what's working, less of what's not. So don't keep adding to your losers, and that it can bury you. And JAGX, it's running on, it's planning on merging one of its operating subsidiaries with a SPAC. They're in preliminary discussion with Swiss Growth Forum, a sponsor of European SPAC, for a potential merger of the company's operational subsidiary to be established in Europe, which will have an exclusive license to its crofelemer and Mytesi for the indications of inflammatory diarrhea and HIV-related diarrhea. And the terms include an upfront cash license fee ranging from $2 million to $10 million. It'll include funding of the European operation. So it'll have this looks like a really good deal for JAGX, and we're finally getting the vindication that we've been waiting for, and we're happy to see it paying off for our subscribers. And, to sum it all up, these three NASDAQ penny stocks are hot right now. There's always opportunity, in penny stocks. And, as the clown Kramer likes to say, there's a bull market somewhere, and it's our job to find the bull market. So, that's what we're trying to do. And, the best part in penny stocks is that huge gains can be made in a short amount of time. And today there was a few runners that we, PEC, that we covered in the past. Started moving, NAKD. So it's going to be the subject of our next article and video. So remember to hit the subscribe button on our YouTube channel, and also remember to go to signup.insiderfinancial.com, where you'll get a first look at tomorrow's runners. So one of the things we want to say is, if after you sign up with your email, it also gives you the option to sign up for our SMS text alert. Guys, it's not us, it's our provider. It only works for US numbers. If you are outside the US, don't worry, you will still get all our email alerts. So with that being said, if you congrats to all that caught the move in BNGO, OCGN, and JAGX. But if you didn't, don't worry. There's always the opportunity to buy the dip, and there's always runners. So our job is we're looking for the next runner, and that's why a subscription to Insider Financial is so important. And the best part is it's free. So go ahead, sign up. And we thank you all for watching. Please leave a comment if you're in any of these stocks, or if you got any stocks you'd like us to cover in a future article or video. We always read your comments, so please do that. And we wish everyone luck and a happy new year. Stay safe, and we'll be coming to you soon with a new video. Thank you very much, and talk soon. Bye.